Okay, so this is a brief market review of yesterday's price action. Yesterday was 27th of November 2023, and let's get on with it. So, yesterday I did a live stream where I discussed and paper traded yesterday's price action, and I wanted to talk about something about yesterday's live stream. Yesterday was a terrible day to day trade because we had already anticipated how choppy and messy it would be. That's why I went in with very small position size. Like I was playing with micro contracts 1 to 10. That was very small. And the reason for me doing that is because I wanted to get a lay of the land, meaning I wanted to, just feel active enough to understand what the price action is telling me. So yesterday was a no trading day, and the thing, uh, what you saw me do was just playing with some micro contracts to get a gist of it. And if you don't know what I'm talking about, please watch yesterday's live stream. So right here we have a daily chart of E-mini S&P 500, and we can see that we had original consolidation, accumulation, reaccumulation, smart money reversal, distribution, redistribution, sell side liquidity taken, smart money reversal, a complete market maker sell model. And after that, we have rallied, and it's been a magnificent rally. So, yesterday I was talking about this fair value gap and the buy side liquidity above this pool. This is yesterday's Monday's candle, daily candle, and look how small it is. And the reason of it being small is it had no draw on liquidity for yesterday. I said that the buy side liquidity is a drawn liquidity, this fair value gap is a drawn liquidity, but I clearly wrote and even said, I think, that I have no bias, I don't know where it's going today. So, and as it should have, it didn't go anywhere. So, over this week and maybe the next week, but in the near future, this is my drawn liquidity, the buy side liquidity. And I think the consequent encroachment of this fair value gap, the blue shaded one, is a nice object, is a nice target to aim at. Again, this is the hourly chart for E-mini S&P 500. All I can think about, if I didn't had anything on the charts, and I have one, two, three, four, just four stuff. It's messy. It says nothing. It's a language that can't be understood. It's a language of choppiness, and it's noodles. Like you can't frame alphabets with noodles. I don't know what I said, but I think you get the feeling. So, how I anticipated choppy market conditions. First, the Monday after a long weekend. And when I say a long weekend, it doesn't mean that the weekend had an extra day. It means that we had Thanksgiving, which is a public US holiday, a widely celebrated holiday. And the major money, the big money, is inactive during these holidays. So, holiday, Friday, Saturday, Sunday, the big money usually takes a vacation during these holidays. So we commonly term it as a long weekend. Like, if there's only one working day, and before and after that working day, you have one or two holidays, you usually skip that working day. You usually bunk on that working day, right? I've done this in school, and I'm sure many of us have done this. So that's what we call a long weekend. And a Monday after a long weekend is usually a very slow and a quiet day. The market usually, gets back into rhythm, gets back into slowly. That's why it's slow. It's trying to get back into normal functioning. Second, range bound price action, you can see it's like a bull flag here. We had a big rally here and just a bull flag. Range bound price action. Third point, no prominent higher time frame PTRA to navigate. All I can see is this little fair value gap here, this order block, but there's no high probability converging. There's no confluence of PTRAs. Usually, for a trade to be high probability trade, you should have higher time frame PDRAs and they should be in multiples. Like you have a fair value gap here, it would have been better if we had a more prominent order block here. It would have been better if we had a more prominent sell side liquidity pool here. You should have multiple prominent confluencing higher time frame PDRAs. We just had a fair value gap here. It was violated abruptly, so I was not even considering it. I just drew it here because I didn't know what else to draw, because there's nothing prominent to draw here. This I was monitoring the order block, but you can see it was utilized before the New York AIM session. The live stream yesterday began at 9 a.m. and this order block was utilized. You can see how beautiful the bodies of the candles are. Random price action. So when we started the live stream, we were somewhere around here, and there was nothing to aim for. Nothing. So that, even if you couldn't anticipate a choppy market condition, I'll tell you one thing. When you don't know, if you are an experienced trader, if you are an experienced analyst, and one day you wake up and you try to do your analysis, and you can't get the direction, you can't get the drawn liquidity, you are not sure about it, it is highly likely that it's a choppy day. Why? Because you can't get it. And this happens after you get a certain level of experience. I couldn't get it yesterday. I was very clear about it. I had no idea yesterday. And that's why I was playing with micro contracts, because I didn't know what I was doing. So, yeah. Also, I had this sell side liquidity or rejection block marked in my yesterday's live stream. Why I marked this and why I did not mark a sell side liquidity below these lows, it's because look how the bodies of the candles, random price action, look how the bodies of the candles are equal. Like these two does not look like an equal lows, does not look like equal lows, but look how the bodies of the candles look like equal lows. If you had just, the bodies of the candles and not the wicks, you would consider them as equal lows. So discard the wicks, because wicks are manipulation. Wicks differ. So if we were going lower and I was short yesterday with my micro contracts, if we were supposed to go lower, I would have taken my maximum position off with the rejection block here and not uh, look for the sell side liquidity below these lows. That's what I would have done. Fourth point, no red news driver. We had one orange news driver at 10 a.m., but nothing, nothing more important. Okay, so this is a screenshot from yesterday's live stream, and the time around the screenshot is, I think it's 9:43. Okay. So and 10 a.m. we had a medium impact news driver, which is new home sales. And I wrote here, I went quiet after a while in the live stream, and this is what suits me actually, to be honest. I want to, if I'm doing a live stream, I'll most probably do a silent live stream, because this suits me. I don't like to talk and put my focus there, and how I am sounding, how my English is sounding. So I wrote here, and I wanted to talk about this in the review. Uh, I said, now look at this ugly wick here. This wick. First, I wrote, like, look at these clean equal highs. Look at this rally here. This rally already took out buy side liquidity. So this is the buy side liquidity, the two clean equal highs. The rally took out buy side liquidity at around 6:30 to 7 a.m., which is pre AM session. The live stream started at around 9 a.m. And to be honest, I was quite, uh, I was talking about other things. And when we actually started analyzing ES and NQ, we were around here, the time of the screenshot. So as soon as I saw this price action, I knew, like, this is not going anywhere. How did I know this? Buy side taken, sell side taken, buy side taken, sell side taken. Look at this ugly wick here. This was 9:30 expected manipulation. What does expected manipulation mean? 9:30 is when heavy volume comes in the marketplace. So when heavy volume is coming into the marketplace, you can expect manipulation. When there's a news driver, people who gamble with news, there's also heavy volume coming into the marketplace. So we expect a news manipulation. Same with 9:30. These ugly wicks take out buy side in a fast manner. What I mean to say is, with news, with drivers that induce volatility in the marketplace, they usually look like a wick and not a body of the candle. What I mean to say is, volatility usually takes the form of a wick rather than a body. Bodies tell the story, which is the usual price action. Wicks do the damage, which is news drivers. When the market takes out a liquidity pool twice, it is a red flag. Equal highs takes out buy side liquidity. Equal lows takes out sell side liquidity. Then there is no point in going for the buy side liquidity. So when the market has taken out a high that takes out a previous high, a clean equal highs, when the market takes out a liquidity pool twice, it's a red flag, and you should immediately think about seek and destroy and choppy conditions. So this is a screenshot from yesterday's live stream. And again, this is the after the fact screenshot. I wanted to make a review because I wanted to highlight some things, but there was nothing to highlight. There is no good setup that I feel confident in. So there's no backtesting here. Backtesting it is here, but what did I learn from this day? That's what backtesting is. I learned from this day is to stay away from these days. And I knew about it, and I knew about it before the day began. You can see it in the live streams, the writings on my charts. I was talking about that this is a choppy day. I even drew uh, an arrow like this, indicating that this is a Z day, like a choppy day. So you have to stay away and stay safe from these days when the market is not supposed to go anywhere. When the market is not supposed to go anywhere, You will force setups, and the setups will look brilliant. Like if you were on the 1 minute chart, you would have seen multiple high probability looking 2022 models. Liquidity taken, displacement, market structure shift, fair value gap, long, stopped out. Displacement, market structure shift, reverse, fair value gap, inversion fair value gap, short, stopped out. Also, one more thing to highlight here. Look at this rally here. It rallied. If it was, it eventually rallied as well. Correct. But look at this deep retracement. What did it went for? Rejection block. Wicks. Wicks do the damage. Bodies tell the story. Liquidity below the bodies. Seek and destroy. Seek liquidity, destroy liquidity. Seek liquidity, destroy liquidity. This is what a seek and destroy day looks like. And ES is uglier. Nasdaq was a little bit better. And the reason, I'll tell you also one more thing. And I have no screenshot for this, but if you watched yesterday's live stream, I was shorting ES. I had no valid setup on ES, but I was still shorting ES. Why I was doing it? And I actually I shorted around here, I think. Yeah, around here. And I was actually timing the market. And how was I timing the market? It was based on NQ. I was watching NQ on my other monitor, and NQ was making higher highs. And as soon as NQ showed a little bit of weakness, as little bit of weakness in terms of breaking discount arrays and respecting premium arrays in NQ, I shorted ES, and that's how I timed the market. This is the secret. This is how you should not. I highly do not recommend timing the market. Timing the market, obviously, trading is timing the market. I'm not. I chose the wrong sentence. I'm saying timing the expansion. Like when you don't have a setup, when the market is consolidating, look at this. Like this is a consolidation. This is seek and destroy. Buy side taken, sell side taken, buy side taken, sell side taken. And when you buy here, this is timing the market because there is no valid setup here. There's no valid setup here. This is timing the market based on intermarket analysis. Intermarket analysis is one of the strongest indicators of expansion. So yeah, I was timing the market, timing the expansion. And if you don't know what I'm talking about, please watch yesterday's live stream. Timing the expansion based on intermarket analysis with closely correlated assets. So yeah, shitty day. That's it for today's market review. If you have any more questions and you want to speak one on one with me, you can apply here. Go to this website, linktr.ee/traderz, and you can sign up here. Thank you for watching.